Good morning, esteemed members. I welcome you all for this one-day seminar on practical experiences in GSTR9, treatment and reporting in GST notices. And I request our Vice Chairman, CA Pramodar Hegde, to escort the speaker onto dais and then welcome her with a floral bouquet. Thank you, sir. I request Pramodar Hegde to give welcome address.
Good morning, members. With a great excitement, I welcome you, each one of you, for the significant seminar on the GST, the subject that's dynamic and it's very crucial for our profession. When I see a hall full today and quite a lot of members who missed their chance to register today, I wonder if it's the subject or is it the CPE block, which is that we need to fulfill. Of course, nevertheless, as we sit in this room today, each one of us comes from a different background and different experiences and different knowledge. But what brings us together is the common quest for understanding the GST better and to master the skill of navigating its complex waters. Today, we have lined up sessions that are just not filling in the forms and ticking off checklists. We are here to know the practical nuances and the kind of stuff which is not in the textbooks or in the material. And today it's not going to be a one-way talk. I'm looking forward to hear from each one of you about your questions, your opinions, and your experiences. And there's a chance for all of us in the room to learn from each other. There's a wealth of knowledge right here in the room, and it's for us to take. I want to extend a special thanks to our speakers who have come with their treasure of trove of insights and who will guide us through this jungle of regulations and compliances. I extend my heartfelt thanks to our speakers. Our first speaker, CA Annapurna Srikanth, and CA Jatin Christopher, CA Saif Prasad, and CA Hanish, who will be taking their time to share their experiences with us, and your contribution makes like this cornerstone of our profession growth. Let's make most of it today. Listen closely, speak boldly, and do not hesitate to ask the burning questions. In our profession, the only bad question is that we don't ask, which goes unasked rather. By the end of today, we'll walk out a bit wiser and more connected and a lot more prepared to take challenges in the GST of our day-to-day compliances. Thank you for being here. Let's get started with this today's seminar. Over to Secretary.
Thank you, Vice Chairman, for that wonderful welcome address. I am privileged to introduce for today's first session speaker, CA Annapurna Srikanth ma'am. Annapurna is a chartered accountant in Mysore, practicing since 15 years, handling indirect taxation, audits, consultation, and litigation. CA Annapurna has been an academic achiever, securing All India third rank in all the three professional qualifications, namely CA, Diploma in Information Systems Audit, and Company Secretary. She was the Vice Chairperson of State GST Committee, FKCCI, for the year 2018-19. She was also the Co-Chairperson of Women Entrepreneur Committee, FKCCI, for the year 2019-20. She is an empaneled member in the Faculty of Indirect Taxes Committee of ICAI. She is sought after resource person at various professional forums and for government in conducting training programs for practitioners, trade and officers in around 200 plus programs. She has authored a book titled Bookkeeping and Record Keeping in GST, published in July 2022. She has contributed a book titled GST, an Abridged Compendium, published in September 2019. She was part of the compilation team for a compendium titled Synopsis to GST Law, published by the Institute of Tax Practitioners of India. Some of her articles in GST have got published in e-magazines of professional bodies. She has developed many handy templates, trackers, compendium, and other resource material on GST. She is the knowledge partner for Insta GST, a knowledge-oriented GST app. She has bagged medals, awards, and certificates and has been felicitated by various professional and public-private organizations, to name a few. Silver medals by ICAI, ICSI for securing All India third rank, Gold medal and Excellence Award by Vasavi Union Bangalore, Women of Excellence Award. She is a playback singer too, having her own label, Fusion Ragas. With this brief introduction, I present before you CA Annapurna Srikanth. Now I request dignitaries on the dais and all the managing committee members to join us for lighting the lamp.
य एष सुप्तेषु जाग्रति य एष सुप्तेषु जाग्रति कामं 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 कामपुरुषो पुरुषो निर्मिमाणः निर्मिमाणः तदेव शुक्रं तद्ब्रह्मा तदेवामृतमुच्यते अस्मिन् लोकः शतः सर्वे तदूनात्यपि कश्चन एतद्द्वैता 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 एतद्द्वैता.
Thank you, members. Now we'll start with the first session. Overview of experiences, key tables in GSTR9 and 9A and 9C by CA Annapurna Srikanth. Over to you, ma'am.
November ತಿಂಗಳು ಅಟ್ಲೀಸ್ಟ್ ಪ್ರಾರಂಭ ಕನ್ನಡದಲ್ಲಿ ಮಾಡೋಣಂತೆ. So I understand there are few members from outside Karnataka as well. So for the benefit of everyone, we'll keep the entire deliberation in English. In fact, it's always a pleasure and a privilege to be addressing before the learned member gathering here. I put in a couple of my thoughts and the perspective which has got changed. I'll just take you through the content, what we're going to discuss today. GST annual returns and the reconciliation statement in form GSTR 9C. The change of perspective. How has been the journey so far? Remember 5 years ago when the forms got notified and we had the discussion about the annual return for the first time, the whole discussion revolved around what data should go into the form. Is it GSTR1, 3B? How do we handle errors? Is it the books data? Or even if the books data is wrong, if there are some transactions missed out, how do we go about with this? This was the first set of discussions which we had when we initially started to understand the forms. Then we had the forms notified for the subsequent years, where the discussion revolved around how do we handle this spillover of data, because most amendments were permitted to be made within September of the following year. So how do we report this? Later on, a lot of representations from trade and industry. The forms are so complex, complicated, cumbersome and all of that stuff. Many reporting norms were made optional. And finally, the 9C reconciliation statement certification was removed and a self-certification was introduced, wherein the seriousness of the forms were lost, what we understand practically, where most of the times it is the clients themselves who comply with it, and definitely there could be more prone to errors because there is one check which is missing, which a professional involvement would do. And today, with a flood of notices which everyone is receiving, the way we look at annual returns is how department views it, how we could have presented it, how the data could have been presented in either in the financials or in the annual returns, so that couple of allegations in the notices could have been avoided per se. So this is how the journey has been so far. Of course, we always view annual return as a tool for self-correction, so that early identification and rectification of errors is always welcome, so as to minimize the interest and penal consequences. In fact, if there has been excess payment of taxes inadvertently, rectifications in annual return can also be used as an additional document which can be substantiated for the claim of refund. Now, the applicability of annual returns, of course, the rule itself was amended, 80 sub rule 3, where for 9C the limit was enhanced to 5 crores. So only those whose aggregate annual turnover, of course this has to be considered PAN basis and not GST basis, wherever it is 5 crore exceeding, they are required to file 9C mandatorily. The rule itself was amended, so there is no need for notification per se every year. However, up to 2 crores, annual return filing is exempted. Although the notification uses the word exempted, practically on portal we see it as optional. And even below 2 crore cases, there is no bar in filing, portal allows, and if at all any rectifications are warranted, I think we can make use of the opportunity, irrespective of the fact that there is no mandatory requirement. Even after the due date, if it is filed, there is no late fee population for optional cases. So probably we may prioritize the cases and consider this as an opportunity for rectification even for the exempted cases. Above 2 crores and below 5 crores, annual returns filing is mandatory. So we have a notification for that as well, which has been provided in the material. Now, what are the possibilities through annual returns? Errors of omission. If some liability was omitted, definitely annual return could be used to include that liability. Of course, mere reporting will not help in any manner. The hit to the electronic ledgers is quintessential to enable an appropriate discharge of the same. Errors of commission, couple of errors where some reporting errors occurred, either while filing GSTR9 or 3B, although there is no tax implications, but there were some reporting errors or grouping errors. So those kind of rectifications could also be carried out through annual returns. Let's say while discharging the RCM and claiming the credit, we have table 4 of GSTR 3B, separate segments are there for import of services related RCM, import of goods related, and also other RCM. Probably while reporting, the interhead or groups got mixed up. The values are fine, but grouping errors, even those rectifications we can carry out through annual returns. Gross and net reporting segregation. If you look at GSTR 2B auto population today, how it comes. The credit notes goes as a negative value for 4A5. So all my credits which get populated in 2B, let's say 100 is the credit and 5 is the credit notes, the 2B will populate the data as 95. So is it leading to less claim of 10 or is it fine? Because of the auto population and the flood of the 2A 3B notices, better to follow what the portal does. Also, to give a legal backing to it, section 34, which deals with the credit notes, is from the supplier perspective. Correct, right? So how credit notes has to be dealt with, section 34 what it deals is from the supplier perspective. Look at it from the recipient perspective. Is he supposed to reverse or is he supposed to reduce it from the ITC part? We can take reference from section 42, although it never became functional, but I would still try to see what the lawmaker intended, wherein section 42 uses the word such credit notes has to be reduced from the ITC. The same thing is coming in 2B also, probably we'll go with that part, but while reporting in annual returns, to give it a clarity, because tomorrow it's like a double-edged sword. We should not be barred by 16 for limitation where we didn't claim it per se. It should not appear to be so. Whatever we reported as 95 in 3B, probably we can say 105 so that in table 6 of annual return we report as 100 and table 7 reversal we show it as reversal and a credit note 5. So the net credit to electronic credit ledger will remain 95, but tomorrow 16/4 timeline limitation should not hit, and during audit or scrutiny or other proceedings, department should not be of a view that we missed out that credit and we missed out reversal as well. So probably this kind of gross net reporting segregation could also be done, and whatever has been already rectified through amendments, that also could be executed through annual returns. Now what are the can'ts? We can't avail ITC afresh through annual return. There is no hit to the electronic credit ledger. Also in the instructions there is a clear bar that ITC can't be availed through annual returns. Can we reverse the ITC through annual return? Yes, but through DRC3. Because its annual return is merely a reporting form, there is no impact on electronic credit ledgers or the liability ledgers unless we execute the parallel DRC3 to substantiate whatever figures we have reported. So that could be done. Can we directly make a change of CGST, SGST vis-a-vis IGST corrections? We can't do it, because again, if that was already rectified through the connected GSTR 1s or 3Bs, then that would be possible. But directly making such head interchanges of the major heads, that is not permitted under annual returns. Let's look at a couple of illustrations and scenarios before we dive into the current year changes or what important significant aspects to be considered while filing the current year returns. Here is a scenario where, without giving effect to the electronic credit ledgers, only by reporting in GSTR9, the tax heads have been changed from C&S to IGST. Table 9, which have the impact of tax payable liability or even DRC3 for that matter, nothing is done. Only reporting heads have been changed. Can we call it a rectification, and will the department accept this as a rectification? The answer is no. Let's say the subsequent claim of ITC in the corresponding year. So we are talking about 22-23. So we are permitted to make changes between April to October 2023 returns. Whatever changes are possible, that will come in part 5. We have done a proper reporting. The reporting in GSTR 3B has been proper, but while filling data in annual returns, table 12 and 13, which talks about reversals and claims in the subsequent period, there were some errors. Mere reporting in annual return, although there has been errors from our end, can it be taken as a finality? Can the officer object stating that, look, you claimed through 3B, but you have reported 3 lakh rupees short in annual return, so I want to disallow 3 lakh. Can he do that? Of course, the burden shifts on the registered person to make all the effort to prove that it is a legitimate claim, but merely on the reporting errors also, there cannot be any demand. Another scenario what I have taken is, the discharge of taxes is proper, the hit to the electronic ledgers is proper. Again, there are some reporting errors in annual return. Well, like I discussed, mere reporting changes will not suffice. Effecting the same through DRC3 is quintessential, and when the department looks at it, if things are aligned, definitely annual returns will serve as an additional document to substantiate all the rectifications, but to err is human, to forgive is divine. Despite all efforts, sometimes we have seen even annual returns have gone erroneously, or taxpayer himself has filed. All possibilities are there and errors have occurred. Cases come to us at a later point in time where department has intervened and few questions are coming up now. Here is a situation where 1 and 3B differences have been rectified through annual return, and now let's say we have received a DRC 1B intimation. I'm sure you're all aware of this new forms which has been notified on the portal. 7512 explanation to section 7512 got amended, or rather whatever reporting is done in GSTR9 is also deemed to be self-assessment because of the explanation which has given effect to this aspect. Now, the implication of this explanation is that whatever you report in GSTR9, if you don't rectify it subsequently and if you don't discharge taxes and if there is GSTR1 and 3B differences, direct recovery proceedings can be initiated under section 79 without being need for providing an opportunity either by issuance of show cause notice or otherwise. The only solace is that instruction which says that even in such cases, an intimation has to be given, for which now portal driven DRC 1B is available. But imagine the logistics of managing this. You can't log in for every client on a daily basis to check whose DRC 1B has been issued. And clients might not be very vigilant to keep track of all the mails what they receive from the department. Probably we'll have to take help of a tool where all our clients' data is hooked up to the tool, and if the tool is able to pull up and share an alert of, look, this client, this DRC 1B has been commenced so that action could be taken. Of course, the checkpoint what the system has driven is, if you don't reply to DRC 1B and 1C, which is recently an advisory in the GSTN portal just a week ago which has come in, you can't file the subsequent GSTR1. If you're finding troubles with filing the subsequent GSTR1, probably one thing to remember is just check on the portal additional notices and orders, or in that intimation segment, if at all you have got any DRC 1B. That is a checkpoint probably for us to look into, oh my God, okay, there is something to address. Now, I would recommend, let's say GSTR1 was more than 3B, which was rectified in annual return. Now, once annual return is filed, 1 and 3B becomes anterior documents. Now, what subsequently is filed with the rectification stands out in comparison to these anterior documents. But you can't, expect that notice itself should not come. We don't know. An intimation could come, or even a notice could come. If at all it is a DRC 1B, where an intimation is given for 1-3B differences even after you have rectified through annual return, probably you can pick up to report under the category others. And you can say that the rectification was carried out via the annual return with a brief explanation. You can reply on merits stating that these clarifications has been happened, but replying is a must. You can't avoid it, and today the portal itself bars from subsequent GSTR1 filing, so probably that is something to look into. Let's take another scenario where GSTR9 is not rectified at all. There are errors in 1, 3B, 9, 9C, everything. More the forms, more the extent of errors. We know how it works, to simply file the perfect returns, it is only possible in the verbal discussion, not even in that sense rather. Practically, everybody has committed mistakes, to the best of their capacities. A variety of errors have happened. So let's take a situation where 1, 3B also filed, 9 also filed, client filed, we filed, our staff filed, we don't know. But there are some errors which are still persisting in 9. Is it the end of it? Obviously, we have an opportunity under section 73 subsection 5, wherein till the officer identifies, even for that matter, even after the officer identifies within a specific span of time, opportunity for rectifications is possible. Draw your attention to notification number 47/2019 and 77/20, read along with circular 124, which says that even some errors persisted, or even if it is an optional category where you haven't filed your annual returns, please use DRC 03 and make your rectifications. So annual returns is still not the end of it. You can still go ahead and rectify even after this deadline. Let's take another situation where 1 and 3 we were only correct, 9 went wrong. Auto-populated submit button, one small this thing happened and written submitted. Merely because something was reported in annual return, can that be the sole basis for demand? Of course, the entire burden shifts on the registered person. He has to back the ball now. The ball is in his court. He has to take all the efforts to prove that this has gone wrong and what were initially filed were right. Well, why are we discussing all these scenarios? The reporting in annual return is only a summary presentation. What ultimately stands is the underlying transaction. To bring in levy, the ingredients of supply and levy has to be established, without which a demand cannot crystallize, and questioning these things become very important whenever such notices are received. Now let's come to the key changes in the annual return forms and reconciliation statement for the current year. I've just put up a summary table where what is mandatory, what is optional. You have the material with you. I don't want to spend too much time on this, which could be referred with you. To give it a key reference, 21, 22 and 22, 23 annual returns, no change at all. Then why are we even having the discussion about this? Although there is no change in the format, there are so many things that requires our attention because of certain other aspects which I will take you through as I move along. Lot of times we see that export related refunds are struck owing to various reporting errors in GSTR1, 3B, even 9 it is not rectified. Probably when you are filing GSTR9 for the current year, please reconsider this and take this out as an opportunity to make the rectifications. Suppose if there were grouping errors, those things. But if you have not discharged the taxes, I would recommend please do it through 3B, because there is a cumulative validation between IceGate portal and the GSTN portal ever since 17-18 till now. So even after November, changes or even those changes would be greatly recommended to carry out through 3B because by reporting it in 3.1B of the GSTR 3B, where the taxes which were left out, the discharge part has to be done so that the invoices get transmitted to the IceGate portal. Whenever these refund cases, we see that refund is struck. Of course, we have the two categories of with payment and without payment option. Whenever it is a with payment of export transaction or the zero rated supply, what we call, it is called as a customs rebate route, where filing of GSTR1 itself is like an automatic refund application. All the invoices get transmitted to the IceGate portal, gets a validation over there of what data is filed over there. If both are in sync, then your refunds will be very smooth and automatically you will get a refund of your amount into the respective bank accounts. Now, what if refunds haven't happened? We have this SB related errors. I've just put up on the slide as to what are the SB related errors, but I would like to draw attention with respect to two errors. One is SB001, another one is SB005. Now, what is this SB001 error? It is shipping bill related errors. Like while filing your GSTR1, there are errors in shipping bill number, shipping bill date and ship port code. All these while we thought that once the November deadline or the till last 2 years, it was till October 20th deadline, whatever the September GSTR1 returns timeline is crossed, you can't amend the shipping bill details. But the portal has been opened to amend shipping bill details right from inception. So you can try it now. It will allow you to do shipping bill number, shipping bill date and port code details correction from 2017-18. Because many times this validation has failed in IceGate portal and refunds are struck because of this SB001 validation. So probably this is something which you could look into, and if any refunds are struck, that could be carried out. Now, as far as invoice errors are concerned, we have Circular 5/2021 of Customs, where manual procedure for making this invoice rectifications in the IceGate portal has to be followed up with a payment of some 1,000 rupees as challan for each shipping bill amendment. And once those invoices are amended in the IceGate portal, we have practically seen cases where refunds have come in. So please identify and report in GSTR9 the correct figures of exports and SEZs with payment of IGST and without payment of IGST, and if there are any errors due to interhead reporting or such things, probably this could be an opportunity to rectify, to substantiate your refund claim. Of course, this cannot be a standalone document to claim the refund, but this will be an additional document to support your substantiation. So that is one of the things which I thought I'll bring in here. Table 5F, the non-GST supply. Last year onwards, this segregation became mandatory, where even no supply items is required to be included herein. Take for example, there is a sale of land, or there are transactions of sale of investments in the form of shares and mutual funds. All these while probably, there are many cases where these things were not reported at all. But the instructions to annual return says that even such no supply transactions has to be reported in table 5F. Well, the moment you report in table 5F, either you have to report in 9C in the turnover part or our balancing figure 5O. Correct, no? The balancing table 5O. What happens? The 5O becomes bulkier and the attention is drawn there. The moment 5O is bulkier, the department's attention is drawn there. So probably look at it, how do you want to report it? Either you want to report it in 5F or take it directly in 5O or exclude it. I leave it to the audience thought process, because sometimes practical calls needs to be taken. Instead of making the figure bulkier and drawing the unnecessary attention, probably, many people have even innocently or unknowingly, they've missed out the reporting part of 5F. And 5O is less bulkier in those cases. So probably something that I just wanted to draw attention. Coming to table 6 of annual return, which is the ITC claim related, segregation. You have to excuse me, I'm trying to minimally use the table numbers, but sometimes I can't help it. Please cope with me. Table 6B is a place for original claims. Take an example of you paid your supplier beyond 180 days. So we have the hit from rule 37 where you are required to reverse it and then reclaim it. All these while we were talking between 6B and 6H for by and large these kinds of reclaims. But last August 22 onwards, we are all aware the entire reporting in 3B undergone a change, isn't it? Initially, the basis was books of accounts, what we used to report in 4A5. Something came in 2B, but we didn't, we have not received the goods yet, or the claim conditions are not yet fulfilled yet. We will wait and then report once the claim conditions are fulfilled subsequently. But August 2022, the notification 14/22 read along with circular 170, which has suggested what should be the ideal course of reporting in table 4B reversals especially. 4A should have data from 2B. That is what the notification and the circular insists upon. Whatever comes in 2B, that should form part of 4A5 ideally, of course the other part as well. 4B1 and 4B2, which are classified as permanent reversals and temporary reversals, has to be reported accordingly. Now take up a situation where your 2B has populated some 1 lakh rupees of credit, but you have not received the goods. All these while you would have ignored, but come August 22, you would first take it whenever 2B gives it. Then in the same month you will reverse under 4B2. After 3 months you have received the goods, you will reclaim it in 4A5. Ideally you should report in 4D segment. I'm really sorry, I know I'm using a lot of table references, but I can't help it. Now the point I'm trying to make is, look at the reporting change for annual return for 22-23. All these reclaims will form part of 6H now. If you put it in 6B, it will be double counting the 2B data. See, 2B would have come only once, but you would have claimed twice in 4A5. So whatever was reported originally reversed temporarily and reclaimed again. Probably the 4B2, if you have included only the temporary reversals part, all the reclaims you will have to probably rework on it and put it in 6H. Now the importance of this doesn't stop here. I'm sure you would have heard of a new ledger which has come up in the portal, which is electronic credit reversal and reclaim statement. So many of you would have heard about it. Now what is this all about? The government looks like all these course of action what government is taking up, it is hell bent to match 2B, 3B stuff. And surely we may expect auto-populated scrutiny returns based on all this field which is being set. Already many are being received, and also the DRC 1C, which is 2B, 3B difference intimation. For that also this will be the feed. The last date to file the opening balances for this electronic credit ledger and reversal and reclaim statement is 30th November, hardly 12 days left. But an advisory which has come up with respect to this states that once you file within 30th November, you have 3 opportunities to revise it within 31st December. If you don't file, you don't have opportunity. If you file, aramse you can take some more time to file it make rectifications within 31st December. Now what is this statement all about? Should I deal a little bit more on this, or do you think I'm going a little off topic, and should we come back on this later? Shall I continue? Because there is a deadline coming up for 30th November. I thought this might be quite helpful and important to discuss on this. Now this electronic credit reversal and reclaim statement, entirely the reporting of new methodology which was introduced from August 22 returns onwards has been correlated here, where the system is matching 2B along with this balances in electronic credit ledger and reclaim statement. Let's say you reported certain values in 4A5 and reversed it temporarily in 4B2. We don't know when you are reclaiming it. So whenever it is reclaimed, the details has to be reported in 4D1 of 3B. Now this statement comes with an opening balance blank value which you have to fill it within 30th September. It will not have any impact on your electronic ledgers. It will be available month on month or quarter on quarter based on your frequency of filing for system to check along with 2B and populate on DRC 1C. So how does this statement look like? You have first column opening balance which you have to fill in. Then you have the cumulative 4B2 of temporary reversals, what you did from last August till ongoing. Then 4D1 of reclaim will get reduced and then closing balance will come. If you are not sure of those workings because you are busy, you need some time, I would recommend file off with the best available figures within 30th November. Anyways, you have an opportunity to revise it. And whatever the reporting was introduced from August 22 onwards, now imagine prior to that, you might have April 22 credits which you never put in 4A5, never reversed, never reclaimed. You directly claimed it as and when your eligibility was fulfilled. Make a workings for all of these things and put it. Even your 37 reversals, that is 180 days aging, it might pertain to 18, 19, 19, 20 older periods. But now you are making a payment and then you are reclaiming the credit. Include all of it in opening balance statement. That would be my recommendation, because if at all it would be subject to scrutiny, it is one document which will be subject to scrutiny. Otherwise, every month 2B, 3B differences, every month DRC 1C fun we have to face. So probably consider this aspect, and while we prepare data for annual return 6H table, we can do a consolidated working of whatever opening balances is pending, which is, which will not come in future 2B. To put it simple, you have some claims pending which is pertaining to old 2B or older periods which will subsequently not come in 2B. Arrive at all those figures and put an opening balance statement, of course with an underlying figure, so that whenever 2B and this balance is compared, that will not go negative. Also the advisory further says that if values go negative, the portal will not block from claiming, but it is advisable not to claim. That indicates that more chances of case getting selected for scrutiny, or the auto-populating of the DRC 1Cs and those stuff. So something this, when anyways we are working on these things, probably this is something we can consider. Now 6K, TRAN credits. There was a reopening of the TRAN credit window last year, if you remember, October to November, for 2 months, TRAN credit window got opened. We have a circular also which stated the modus operandi of how this procedure works. But there is a key difference between originally how we filed TRAN 1 and how things were filed when the window got reopened. Originally, once you file the TRAN 1 form, it is a direct hit to your electronic credit ledger. But this time, there is an officer validation process which was, intermediated, where only after the validate this will get reflected to the credit ledger. So obviously many people, in the enthusiasm of rectifying TRAN 1 data, they have committed more errors, because they had to, many have put in this delta figures rather than adding up and putting it. They were supposed to claim 110. Initially they claimed 100. Ideally they should have put it 110 this time, they ended up putting 10. So officers, again notices were received stating that originally what you filed 100, now for 90 you pay back because you only said it is 10. So all this has happened. Ultimately, whatever officer has validated and has travelled to electronic credit ledger, that will only come under 6K. Anyway, 7H, okay, so coming to this 7H, what is 7H? All reversals pertaining to, the other reversals, we have the common credit reversals, Rule 37, 180 days aging reversals, every head, so table 7 has multiple heads where reporting segregation is required. Of course, it's an optional table where all your reversals you can club in 7H. But my recommendation would be, please do a segregation. Why? Because now this can again be linked to opening balance statement. If you have any reversals which needs to be reclaimed, part of this could be a data of the 7H. So hence, even though it is an optional reporting, my recommendation would be, please segregate all the reporting so that you will get a basis for your opening balance statement. Now 8A, the cutoff generation point of 2A data for 8A would be 1st December 23. Why do I say so? 16.4 got amended, which was earlier due date of September return now became 30th November since last year. So after 30th November, whatever GSTR1s are filed by the suppliers, that system itself is identifying it as ineligible under 16.4 and populating. Table 8A will also have a cutoff date of, table 8A would ideally populate on 1st December 23 after this cutoff point for GSTR1. So in case you have any pending GSTR1s to be filed for any previous periods, it would be greatly advantageous to file within 30th November. Ideally it should have gone within 11th of November because 2B gets populated in 14th and the corresponding credit to the recipient. But well, 30th November is what is the date provided here, and that is something to look at. And recently we received another advisory for Rule 37A reversals. Now what is this Rule 37A? Section 41 of the CGST Act got amended. Before that, I think it got amended from 1st of October 22. Before that, whatever credits you claimed in 3B was provisional credit. But after this amendment, once you claim any credit through 3B, that becomes the final credit subject to the fact that your supplier should have filed and paid the taxes. Now how do we identify this? Let's take a situation, your supplier has filed his GSTR1, you have claimed the credit but he never filed 3B. Now this is something which will get a mail communication to a client based on the recent advisory, Rule 37A reversals 1, that too it's a lump sum amount. Ideally they should give a backing of the individual transactions. But yes, your 2B data has another separate column as to the date of filing by the supplier, based on which you need to identify if anything filed after 30th November or if the timeline is over, then 37A reversals must be done. Okay. As far as 37A reversals are concerned, supplier should have filed within September, recipient should reverse it within 30th November. So September due date is already over. Now whoever has, so that is why system is able to populate the data. The whole thing is directing towards automated reconciliations at the system level, and wherever there is a discrepancy, either you can expect an intimation in DRC 1C or 61 ASMT 10 notice or detailed review during audit. So these are the way system is being developed to have checks and balances. Table 8B, the instruction says if you want to provide a reconciliation of 2A, you can upload it in 9C as an attachment. Again, if you are planning to file your opening balances statement, it is greatly recommendable to do this reconciliation and upload on portal. See, tomorrow if that opening balance statement gets selected for scrutiny, you have some backing document which you have put on portal. Rather than you on a standalone basis stating so, if you can work it up and put it on the portal, that has more sanctity. So probably that is something we may look at it. So although I said that no change in the form, you look at the way reporting has undergone change because of all these aspects. Now coming to part 5 reporting. Now what is this part 5 reporting? 10, 11, 12, 13 and 14. The data pertains to 22-23, but amendments, rectifications, inclusions happened between April 23 to October 23. This is part 5. All these while we were considering 20th October as the deadline for it. Now they have changed it to 30th November. But remember, it's a dual criteria to be met. One, it should be contained in the returns between April to October. Two, those returns should be filed within 30th November. For all the 16/4 notices, whatever we have been receiving, let's say March 2020 return filed in January 21. The entire return itself was filed in, after 16/4 timeline, whatever it is. What are the arguments which we are placing for such a notices what we have received? We are stating that once a self-assessed tax has been paid in the returns, it is a valid return. That is the definition of valid return under the CGST Act. Now, once a valid return is filed, department cannot part accept a valid return. It's two faces of a single coin. Output is one face, input is another face. Either you accept the whole coin or reject the whole coin. You can't say I will accept heads and I will reject tails. It is not possible. So this is the argument we were taking, stating that part acceptance of a valid return and part rejecting of the valid return for your convenience is not acceptable. And 16/4 is primarily to a case where, let's say, March invoice are included in November returns. That is a case which is getting covered in 16/4, not a March return filed in January return, because we are paying late fee, we are paying interest. When there is other kinds of penalizing options which which is already prescribed and adhered to, again denying the entire credit based on this 16/4, presuming it that the return filed belatedly itself, entire ITC is going to be denied, is completely not in accordance with law. So these were the arguments we were taking up till the amendment to 16/4 was introduced. But how the amendment has come in is, they freezed a date now. Doesn't matter the return when it is filed, they freeze the date. That is why dual criteria has to be fulfilled. I am reiterating this part. It has to be present between April to October returns, and this has to be filed within 30th November. Although the date mentioned is 30th November, for GSTR1 it is ideally 11th November. For credit notes from the recipient perspective and other data, it is 30th November. So please note these aspects. Now, table 12 of annual returns requires subsequent reversals to be reported. Rule 37A reversals, which you are supposed to make within 30th of November, that also should be part of this table 12. Look at the amount of planning which is required if you really intend upon to file an accurate return. Of course, table 12 and 13 are optional. Rule 37A, which you will be reversing in 3B returns of this month, you have to report it in table 12 of 22-23 annual returns. Similarly, reclaims, the instructions to reclaim say, except Rule 37 reclaims, all other reclaims you can put in table 13. I am not able to understand the logic per se why it needs to be excluded. They say it should be included in the next year 6. But table 6 of next year will include all reclaims, not just this. Whatever was claimed during that particular will include irrespective of what came in 12 or 3, unlike the output part. Anyway, so that is what the instructions is. One more important aspect is, from last year onwards, HSN outward reporting has become mandatory. Mandatory for B2B transactions with respect to turnover below 5 crores, mandatory at 6-digit level for all transactions for turnover above 5 crore. And importantly, of which year do you consider this 5 crore turnover? For 22-23 if you are filing, it is not 22-23 turnover, it is 21-22 turnover. Preceding years turnover basis will be basis for reporting how many digits of HSN you need to report in table 7. So this is also something, generally we consider the same year turnover, but actually the instructions is clear as to previous year's turnover should be the basis. So somebody having a 5 crore turnover in 21-22, let's say has a 2 crore turnover, he is required to report 6-digit for all the transactions and not 4-digit for B2B transactions. Now one more important check what is possible here is, department is keen about looking at this table 17. Why? Because easy to catch classification errors. It need not do much of a work. Some Excel simple work is sufficient. Anyways, the table is available. We have practically seen cases where all kinds of blunders have happened, Clients have used a HSN code with a rate. That rate itself is not there for HSN code. How do you substantiate a notice on that? Section 76 is a notice which can be issued for all such classification errors. And remember, there is no time limit prescribed for issuance of the Section 76 notice. The 73 timeline what we celebrated for Section 73 notice is over by 30th September or for 18-19 by 31st December. Such shield is not available in Section 76, and classification related notices can be issued. Of course, the limitation law will have to be considered here to fix up a reasonable timeline, probably borrowing it from Section 74, which is the highest prescribed time limit in the GST law. But then the point I'm trying to make is, these kinds of checks and balances will add value to the clients. Now that filing 9(9)C has become more a mechanical stuff, but if we can pitch in to help clients in these aspects where we check this HSN, whether this rate is there. Same HSN, 2 rates are there, no rate change notification. You look at it, how department can come through with a notice on these aspects. So we correlate with table 12 of GSTR9, whatever has been filed, rework table 17 if at all any errors occur during that period. So whatever comes in table 17 of GSTR9, HSN outward supply reporting, we need to again correlate to table 9 of 9C where rate wise taxes. Again 17 and 9 of 9C should go hand in hand. Your own forms, one says something, another one says something, can't happen. So these are the interconnectivities which are there. Coming to few more aspects which we can discuss. Can any liability which was identified during filing of annual returns be discharged through credit, or it has to be done through only cash? I draw your attention to Circular 172, which says that any liability either self-identified or identified by the officer except RCM could be utilized through electronic credit ledger and filed. Now this will lead to ITC shopping in a sense. Why do I call it as an ITC shopping? Let's say it's a transaction of March 23, okay? If you had filed March 23 return including this transaction, you didn't have enough credit and you were landing up paying through cash. You got few credits accrued from April 23 to October 23, and now when you are filing your annual returns, you have enough credit balance. It tantamounts to using a future credit for discharge of a past liability. Well, since we have the circular, fingers crossed, hoping it will not get rescinded. So we will take the benefit out of it, and definitely we may proceed to discharge with credit ledger if it is a non-RCM liability. If it is is an RCM liability which is identified at the time of annual returns, would it be a good idea to discharge it through DRC 3, or would it be a good idea to discharge it through subsequent 3B, although I have crossed the timeline of November 30th? 3B would be the good case for reporting for a couple of reasons, I would say. Firstly, whatever RCM payments you make, the underlying document is the self-invoice. You can't literally go back in time to generate a self-invoice for 22-23. Even though the liability is pertaining to 22-23, today you have identified and you want to discharge it now, you will raise a self-invoice for current year. Even the reporting norms of annual return say that RCM to be reported in table 4 of the respective year in which such tax was discharged. Take this to the advantage, file the RCM in 3B, peacefully claim credit also in 3B instead of discharging through annual return. So this is this would be another recommendation of mine. Coming to this interesting correction about CGST, SGST vis-a-vis IGST. Actually, the transaction was an IGST transaction. Erroneously, it was discharged as CGST, SGST. Okay, now you want to rectify it. Section 77 provides for rectification. You look at this, there is no automatic cross cancellation of liability. ಯಾವುದೋ ಒಂದು ಫೈಲ್ ಮಾಡಿದೀವಲ್ಲ ಪರವಾಗಿಲ್ಲ, no, ಪರವಾಗಿಲ್ಲ ಇಲ್ಲ. It has to be the very same way it has to be done. CGST, SGST, same thing should go. IGST, same thing should go. Now what is the course required from your end? You discharge wrongly CGST, SGST, pay the right tax IGST, claim refund of CGST, SGST. Subrule 89, Subrule 1A to Rule 89 was inserted while Notification 35/2021 dated 24th September 21. What does the subrule say? The relevant date for the purpose of filing a refund application with respect to this C&S and I errors is the date of payment of such correct tax. Now, there were also doubts about the usage of words subsequently held in section 77. What does section 77 say? You have discharged C&S, but subsequently it was held to be I, or vice versa, 19 of IGST Act. What does this subsequently held means? Is it held by a court of law? Is it held by the proper officer? Or taxpayer himself held it so subsequently? So the circular 162 clarifies subsequently held covers all scenarios. So even self-identified by taxpayer also will cover subsequently held. So whenever you discover that there has been an error in the type of transaction, you also have a shield from interest liability, because once you've already discharged the wrong tax, while discharging right tax, no interest repercussions owing to that shield available in section 77 and 19 of IGST Act. So make use of that section, Rule 89 1A, and the circular which provides discharge right tax, claim wrong tax, file. 2 years time you have from the date of payment of right tax. The circular, circular also, the notification also says that, now okay, this notification came from 24th September 21. What happens to prior payments? Whatever was made before, but we don't know whether we are eligible for refund or not. The notification says for all the prior payments, 2 years to be reckoned from the date of this rule coming into effect, which is 24th September 2021. Aduku time agoytalla 23. So why are we even discussing this? Please hold on. We have notification 13/22 which has excluded some period from refund application. Yavaginda? From first day of March 20 to 28th day of February 22. So till 28th of February 24, if at all any of your transactions fall within this period, please explore the opportunity of claiming refund, because the 2-year timeline is still a possibility if this criteria fits into your case. So these were a couple of things which I thought I will discuss about the key considerations while filing GSTR9 of this year. Now as far as GSTR9C is concerned, one major change in the form. All these while table 5 turnover reporting and that balancing figure 50, those were the only two things which were mandatory, all other things were optional. But come this year, 4C to 4N has also been made mandatory. Now 6% rate has been inserted. These are the key changes. That expense-wise breakup is still optional, so we can relax on that. Otherwise, it is all the same like the previous year. Now what is this 5C to 5N? You have the deemed supply under Schedule 1, your valuation rules, forex differences, unbilled revenue, some financial credit notes related reporting. So those things has to be given as a breakup. They are trying to narrow down the bulkiness of 50 so that they can focusedly see what exactly is this 50. It should not be a tax escaped turnover. So 50 will have the limelight now. So please be careful in these aspects and reporting must be appropriately done. It's only a self-certification which is required in 9C, but still it permits uploading of documents. It would be, it could be used as an opportunity to probably make these basis documents, like I said, that ECRRS statement, electronic credit ledger, reversal and reclaim statement, whatever the opening balances and all that. You can prepare a statement to support this and upload it on the portal if you consider it might help for your case. Now coming to this key reconciliations and correlatives. Your turnover, the left side of the presentation covers reconciliation within 9 of the same year. What all should be reconciled? So table 4 plus 10 minus 11, ಸ್ವಲ್ಪ math, so you have to exclude me. You have to excuse me. But to give it in a summary form, how do we arrive at the taxable turnover per se? 4 plus 10 minus 11. This should equal to what tax I discharged in 9 plus 14. So this is the simple thing. Of course, if you have used DRC3, so this is a simple math you can follow for reconciling your taxable turnover. If you want to arrive at the total turnover, just add 5M to it, which should ideally match with your financial turnover. As far as ITC is concerned, if you have opted to report 12 and 13, so 6 plus 13 minus 7 minus 12 will be the math for arriving at your net ITC, what you should have claimed in the book. Now 8C is what is come in 8A plus what you have claimed. If there is excess in 2A which you have not yet availed, two possibilities: you have availed it in subsequent year, or it is ineligible credits which you will never avail. So this 8C can be contrasted with 13, both are not same, because 8C has the basis from 2A, but 13 will have your imports, your reclaims, all other adjustments also will be there. So 8C is always not equal to 13. So this is one more math. Now coming to the 9C part, we have the turnover excluding the the exempt turnover part, which we have in 7F. So even this is laterally comparable as well. The left side of the form and the right side of what I have shown, that is also laterally comparable. So we have the rate wise, and again sometimes DRC3 is discharged through 9C. So if anything is done, so that also could be correlated to check. Total turnover we get in 5P. ITC 12D minus DRC3 for reconciliation statement, and table F14 if reported, all of this should get reconciled. Now 12A in 9C, which is about ITC, this needs to be reduced, this needs to be reported on net basis, which is after reversal. While you reverse, apart from table 7 of 9, even 12 of 9 has to be considered here. And 13 vis-a-vis 12C, what you have to claim subsequently. These two parallels should match. I know, this is all a note point for your team to work upon, probably as a checkpoint to consider. Now, this slide explains the cumulative reconciliation across 2 years. Now, 1 year audit, you said this we have discharged subsequently. So, how do we reconcile cumulatively? 14, table 14 you would have shown stating that this year we have discharged, next year. So when you compare 21-22 and 22-23, what has come in 14 of 21-22 should go minus from 9. Otherwise, ಈ ವರ್ಷದ್ದು ಈ ವರ್ಷನೇ ಹೋದ ವರ್ಷದ ಈ ವರ್ಷ that might be not a, then your assertions and annual return, the credibility will go off. So this is something to correlate. Then 8C, of course, form 8, table 8C of 9 allows negative values. Why? Cumulative adjustments you can make. Last year 8C what you claimed and this year, so all those things are possible, so just keep a check on it. And 12 and 13 of what you reported earlier, irrespective of what you reported or not, that will still form part of 6 and 7 of the current year. As far as ITC is concerned, last year 12C and current year 12B should be same. Closing balance, opening balance. So simple reconciliation on that. Again, if there are differences, these are all something, things might come up. And like I said, HSN data rate wise and HSN code wise, that should match with rate wise reconciliation in 9C. So these are the cumulative reconciliation which you need to consider. Now, how the department looks at the annual returns, all form driven comparisons, 100 forms, 1, 3B, 9, 9C for outward supply. Again, for inward supply, the lateral comparisons 2B, 2A, 2B, 8A with our 3B, 9, 9C. So these are all the comparisons they do. We have seen, out of experience, we have seen all audit cases, they do such comparisons, or even scrutiny cases, they do such comparisons and come up with some differential values. This form to this form, these are the differences you pay tax or you explain. This is what they come up with. So if everything is reconciled, most of the things match, then especially scrutiny is something definitely could be excluded from once the things are in aligned with. If at all there are negative values in 8D, which means that you have claimed more credit than 2A. So that value also sometimes they are making it part as audit observation. Value in 8D is negative, you have claimed excess ITC than 2A. So reverse it with interest and penalty. That is what the notices come in. Like we discussed in the previous slides, department officers are also undergoing training programs to understand what to see in 9C, what to see in financials and all that. So they do this correlatives of what exactly. So that is the focal point for them. So those things they look at the OBs and closing balances. Like I said, previous tax actually discharged in next year, madidara ilva, all this they will see. And merely if it is reported as a liability or even DRC3 has been discharged, whether it has hit to the electronic credit ledger, they will call for all those differentials and documents, prove if it is reported and discharged through DRC3. Okay, even if you have already filed through DRC3, they will issue interest notice. You yourself have stated that you missed out a liability and you have not paid or discharged the interest. So a notice for paying interest. Table 14, that is first year transaction reported subsequently, that is also delay of discharge. And if you remember the amendment which has come in 50 subsection 1, net basis discharge interest only for cash payment for belated 3B. But if you report a particular transaction itself altogether either through DRC3 or subsequent 3Bs, interest is on gross basis, not on net basis. So table 14 DRC3 all gross basis interest and not net basis interest. Late fee or penalty for belated filing. Firstly, late fee is only for 9. For 9C they cannot issue a late fee notice because law has not prescribed any late fee for belated filing of 9C. So what they do is they come up with a 125 penalty of 25,000 for the belated thing. So the next slide I'll be touching upon what could be the pointers of reply to the departmental notices what we receive. I think a week ago the Kerala High Court has given a judgment in the case of global plaster wires, where they've upheld the penalty levy under section 7311 for other than belated 3B cases. Now what is this 7311? If any collected tax is paid beyond 30 days of the due date of that payment, penalty prescribed under 73(8), which is 10% of tax or 10,000, whichever is higher, can be automatically imposed. Now this 7311 is an automatic penalty and it comes up with a non-obstant clause. That is, we know that 73(1) notices come with the period where within that period if you have discharged taxes, for some period it is no penalty, then we have differential slabs like 15, 25, even for the 74 cases for that matter. But that shelter which is available in 73(6) is not available for 7311 penalty because it comes with a non-obstant clause vis-a-vis this subsection 6 and 8. Meaning thereby, any collected tax discharged beyond 30 days will attract a automatic penalty of 10% or 10,000 of whichever is higher as per this, and this was upheld in that recent judgment of Kerala High Court. So anyway, so so this has to be also be borne in mind. Many a times we probably during the discussion we state that cum tax benefit should be taken. We have the valuation rules which provide for wherever if you have not collected the taxes, you can go in for a cum tax valuation where the money collected is inclusive of taxes. When we take that stand, we should do a cost benefit analysis of 7311, because if you pay taxes out of your pocket, 7311 cannot come because you didn't collect it at the first instance. But once you make it a cum tax adjustment, it is deemed that you have collected that also, and then there is a window which is open under 7311 to pitch in for you. So probably something that you can consider. And like I said, HSN is something the department will look at. That HSN first of all are rate idea, and if any change in the notification have that application happen. So these are all basis for the department to look into on what you have reported. And they do this ledger scrutiny of your financials with what you have filed, other income, incentives or discounts. They know what heads, legal and professional charges, RCM, transportation. So this ledger scrutiny they will do to see whether at all you have missed on any tax payments, including notes to accounts. They've kind of becoming experts to read financial statements from their perspective. Now let us look at the whole discussion revolved around how complex it is, how department will look at. We come to the cream part of the session now. Whatever notices we may expect, how do we gear up and prepare to reply to such notices? That's the whole point, right? Things would have gone wrong. Now what do we do now? So when notices come, that is the whole point about the discussion, and which could be the key takeaway as well. Late fee notices. Section 46 says, read along with Rule 68, 3A notice can be issued whenever there is a non-filing of any specific return, be it 3B, or final return, or even this annual return. Interestingly, the notice 3A notice got notified for annual return only on 4th August 23. 38/23 notification notified the format for issuing 3A notice to non-filers of annual return. So before that, if at all any notices were issued, definitely we can use section 160 subsection 2 to object that, because section 46 uses the word as may be prescribed. When the law is not prescribed, a notice cannot be issued at the first instance. That is first point. But anyways, even after that, if somebody has responded or things like that, can the late fee be demanded at the first instance? Section 47, which is a levy of late fee provision, doesn't provide scope to issue a notice. Okay, so they can't issue a notice in 47. 73/74 provides for issuance of notice only for tax, interest and penalty. Late fee is not covered in 73/74. 127 covers only penalty. So which section will they issue to demand late fee? No section. If at all any demand for late fee has to happen, portal has to drive the demand, because unless you file that, portal will not allow you to file the form, pay that. The only way to collect the late fee is through portal. If there are manual notices issued for determination and recovery or demand of the late fee, definitely there is no jurisdiction in any of the sections to issue such notice per se. We had an interesting case. There is a registered person who had filed in his 3B 1.5 crores, and subsequently 10 crores were discovered, and in the next 18-19 they paid the taxes on that 10 crores. Total turnover became 11.5 crores. No late fee. I said chance per dance, file it off. Portal is computing late fee only on table 4 turnover, not the subsequent part 5 turnover. There was another case, pathetic though. His turnover is 1 crore. Accidentally, while filing 3B, 1 crore became 1 more 0, 10 crore. Taxes all proper. Only the turnover became 10 crore. Thinking it is optional, he didn't file. It is actually optional. He didn't file. He got a 3A notice stating that your turnover is 10 crore, file. Because he got a notice from the department, he wanted to file the return. 1 lakh rupees late fee is populating. He has rectified table 4, but late fee is getting calculated. Probably the software has fit the formula to 3B turnover of 17-18. So now, since it is an optional, the advice given was file a reply stating that attach your financials, go on merits basis, file a reply stating that first of all it is optional, and hence I am exercising that option given and I am not willing to file the return, something like that. Otherwise they will end up paying 1 lakh rupees of late fee, and again claiming refund is although they are eligible for that, it's a long drawn process. So for late fee notices, there is no requirement to pay any late fees because there is no jurisdiction in the law to determine and demand the late fee. The standalone interest notices, we understood that DRC 3 basis that interest notices are being issued that on gross basis. Can an interest notice be issued on a standalone basis? If we carefully read section 73 and 74, whatever section they take up, tax, then underlying interest. In fact, in the excise regime, I see a lot of notices issued by Central Excise Department, or the Service Tax Department officers, where they use something called as demand deposit appropriate mechanism. Now what is this? Tax has already been discharged through DRC 3. If at all the officer has to issue a proper notice for interest, he should first also demand the underlying tax, appropriate it, and then demand interest also. That is when the notice will stand that requirement as per 73(1) or 74(1) notice. If standalone basis interest is demanded, again we can question the jurisdiction on technical grounds, saying that 73 and 74, there is no jurisdiction in 73(1) to demand interest alone. So that is something we can gear up to reply. Penalty notices, it could be section 125 general penalty for non-filing or belated filing, or even that 7311, which is paid beyond 30 days, which we just discussed, that global plastowares case. Penalty by its very nature means penalizing for an action which warrants proof of animus. The intention that there was the wrongdoing which led to evasion of tax is quite quintessential if a penalty has to be levied, and that animus has to be proved. On a routine basis, just because a provision is available, they cannot issue a notice, and again general discipline which has been prescribed in section 126 has to be considered before issuing such penalty notices. Definitely whenever a penalty notice is there, the officer is required to prove this animus, and if there is no proof of animus, then definitely this can be a ground to overhear. Now, again, if the issue of penalty for late filing or non-filing of GSTR9, once late fee is already there in 47, although we are not agreeing and paying it, that's a different thing, but there is already levy. So again, a penalty under 125 is double penalty, or penalizing twice the taxpayer. Hence, again, that penalty will also get dropped. We can contest it accordingly. Now, DRC 1B, which I was talking for 1-3B differences, after 9 is filed, we can choose that other options. If uploading a document is available, we can attach this 9 and then give the reason that such rectifications have been carried out. Lot of times we see notices take the very common 2A 3B notices. What do they do? How does the notice look like? One tax period they will select April 21 to March 22. 2A so much, 3B so much, difference. Some lateral comparison of forms and some value differences are put up in the notices. Will that suffice to even make a demand at the first instance? CCE versus Brindavan Beverages. The apex court has held that the show cause notice is the very foundation for putting up any demand, and the demands must be intelligible, clear, and it should not be vague. Some figure differences they have put up. How do we know what are the underlying transactions or what exactly is the demand? It is very unclear. We are blinded by our own truths and facts, and what we do is, before even they ask for it, we prepare a elaborate meticulous reconciliation and put up in the reply. Whenever only summary values are demanded, probably we can look at the notice and write an interim reply to the show cause notices seeking to resolve the anomalies in the show cause notice. Now, what are these anomalies? Firstly, transaction specific details are not forthcoming in the notice. Secondly, HSN, especially if it is an outward supply part, HSN, time of supply, place of supply is not specified. Please resolve these anomalies and then we will reply to it. See, without understanding the question, how do we attempt to answer it? So probably whenever it is a summary value notices, we may consider replying on these aspects. I'll take another 3 minutes to conclude my presentation. Yeah. Notices based on reporting errors in 9 and 9C. Yes, the burden shifts to the registered person, but merely 9(9)C reporting errors cannot be the basis unless there is a ingredients of supply and levy are established. There cannot be a demand. It will be the requirement on the side of the registered person to bring on these aspects in the reply to the show cause notice, so that things can be questioned at the very first opportunity to avail the safeguard available in 160 subsection 2 of the CGST, KGST Act, whatever. We also see that on the superficial review of financial statements, demands are crystallized. Legal and professional charges, transportation charges, sundry debtors closing balance, with so much of presumption that whatever values have been reported, everything is subject to RCM. It is very important that each and every underlying transaction has to be analyzed by the officer before such a demand is put up. Section 34 of the Indian Evidence Act says that books of account can at best be a relevant evidence but not the conclusive evidence. What if books of accounts have gone wrong? Errors in books of accounts are, could be possible, and officers cannot simply base the financial statements as relied upon documents for the issuance of show cause notice. So the point here is, RCM is not applicable on all legal and professional charges, because whatever they pay to notary who is a lawyer and not an advocate, that also will be included. Sometimes registered person will club the auditor fee also under legal and professional charges. So, but the notification says services provided by an advocate. Advocate should have that license to practice by passing that respective bar council exam. So there is a difference between advocate and lawyer, and what is services provided by advocate alone is subject to RCM and not every legal and professional charge per se. So just going on ledger heads cannot crystallize a demand per se. Incentives and discounts, I'm sure most of you would have received notices for this because it is mostly reported in other income. Ideally it is a wrong reporting I would call, because these discounts and incentives are given by suppliers, correct? When you receive an amount from your customers, it is an income. When you receive an amount from your supplier, it is a reduction in your purchase cost. So after these notices have come in, many of the registered persons have realigned their reporting to reduce these incentives and discounts from purchase cost rather than show it in income. Otherwise, we are only drawing unnecessary attention of the department. So probably this could also be one of the key learning from our past experiences as to how the reporting could be done. The sundry creditor balances, left, right, they are just putting up closing balance in the balance sheet as with the presumption that everything is beyond 180 days. Now, look at the presumption and the entire show cause notice that the demand itself is on assumptions. So definitely these needs to be questioned on technical grounds. I've also seen a few notices where RCM, they take the ledger values, okay, equally accrue it across 12 months. The notice itself imagines time of supply accrues evenly across 12 months. That is doing best judgment assessment. Section 62 non-filers assessment, Section 63 unregistered persons assessment. These are the only two sections which permit best judgment assessment. 65, 73, 74, nowhere best judgment is possible. So these points can come in for replies to show cause notices at that, where merely based on financials and my annual written scrutiny, where it has been identified as data is spread across evenly throughout the year, would be wrong. Like I said, HSN related classification aspects where section 76 notices are issued, we should not readily agree to the classification proposed by the revenue, but question back the revenue to prove its substantiation, not just arising out of my 99C reporting, but what is that corroborative evidence which revenue is going to bring in to support the allegation made in the show cause notice. So these kind of technical questioning will definitely help us rather than going on merits on such cases. Also we see that sale of fixed asset, motor car is sold, they pick up the fixed asset schedule transaction where sale of motor car, that is taken up and 18% flat they issue. They are not even considering the notification 8/2018 where the CC, length, engine capacity, all this has to be considered, and inclusive basis 12%. So there are so many things to look into. So whenever such notices are received, definitely these things could be looked into. I think as we come to the last part of this session, I would say how much ever we try, how much ever we make honest efforts, it is nearly impossible to file perfect and accurate returns. Let's try our best. Doesn't mean that way. Let's definitely try our best, but let's all gear up for the litigation support to our clients given that notices are flooding. You have couple of annexures which can help your team to see, that is there in the material printed out there, what is mandatory, what is optional. So for 9 and 9C that has been given. And any questions probably are we taking up right now or at the end? At the end, okay. Thank you very much for your patient listening. I've tried my best to compile and put up my thoughts on this topic. I once again thank Bangalore branch of SIRC of ICAI for having me over here to present on this topic. Thank you.
ಧನ್ಯವಾದಗಳು ಅನ್ನಪೂರ್ಣ ಶ್ರೀಕಾಂತ್ ಅವರೇ, ನಿಮ್ಮ ಅತ್ಯುತ್ತಮವಾದ ವಿಚಾರಗೋಷ್ಠಿಯನ್ನು ಪ್ರಸ್ತುತಪಡಿಸಿದ್ದಕ್ಕಾಗಿ. As we all know, there is no revised returns in GST, and if we have made some mistakes during monthly compliances, during annual return time, the same can be rectified with some restrictions. What happens if we make mistakes in the annual returns also? How do we keep ourselves ready with information required for the auto-populated notices? A round of applause for CA Annapurna Madam for discussion with illustrations, tables and practical experience. On behalf of members present here and all the managing committee members of Bangalore branch of SISF ICI, would like to hand over a memento to Annapurna Madam as a token of respect and gratitude. Can I request Pramodar Hegde, our Vice Chairman, to do the honors? Thank you, ma'am. Thank you, sir. I request members to enroll your CA article students for student conference which is to be held on 8th and 9th of December 2023. I request each one of you. Thank you. And now we will break for coffee and then on 4th floor and reassemble sharply at 11:45, 11:50.